Good morning. Happy Friday. Someone asked yesterday in the chat room, is this the most difficult market that you've ever experienced? And I've experienced a lot of markets, and I can remember vaguely things being difficult. Things always get difficult from time to time. It's just
Good
normal.
morning.
Oh,
Happy
geez.
Friday.
Kill this. And so what makes a market difficult? Well, uh, what makes a market difficult is when it doesn't move, meaning it runs in place. Now, I don't know if this is the most difficult market. I tend to think not. I think the bottom after the bear market that began in 2000 and began to bottom out in 2002 was probably the most difficult because so many stocks were beaten down into single digits and they just didn't move anymore. And one of the parts that make this market difficult is the relatively narrow breadth. The amount of stocks that are really trending and moving, and even the ones that are trending and moving, um, they do it for relatively short periods of time, the vast majority of them, before they begin to stall or do their jiggles. So, the biggest advantage to us um, as traders and even investors is to be able to recognize a market that's running in place. And there's so many things that make what we do difficult. Is that the psychological part of wanting to make more money, of course. For some, stop losing money um, or breaking even, and determining how prices are moving, what's moving, so on and so forth. So when things are moving in unison and flowing, we think that we are gods to the market, because it's so easy. Um, so, this period that has made this market difficult is the relatively long periods of running in place and the narrow breadth. So, when you have wider, whippy ones like this, where it seems like, gee, this thing's gonna go. It's got big bars. It's it's gonna follow through, and then it doesn't. That's difficult. You have periods where the bodies of the candles are overlapping each other like that. That's difficult. And then we spoke about this, or I spoke about this at this point in time when prices came out of this consolidation, and I said, what's going on here? This thing rested for a week and a half. This thing should be blasting off, and it's running in place again. It gets going, and it's like, here we go. Nope. Back down, running in place again. And so here, last week and this week, I guess part of this week was mostly last week, I spoke about increasing momentum and how to recognize it. And that when you get an increase in momentum, it's typically followed by slowing momentum. And then we got our sell signal from our internals, I guess right around here. I guess it was something like that. And so far, we had some corrective price action, but it's just been more running in place. So there's lots of running in place, and that's hard. And there's points where it goes up and tries to go down and so on. So that is an element of what makes this market difficult. The narrow breadth and stops and starts make it difficult. 2002 to the beginning of 2003 was difficult because just things didn't move. Anyway, so I just wanted to share that. So where are we at here now? Well, the S&Ps have come up toward the all-time highs. And I thought going into this week, the way prices traded last week, that, would be like, okay, here's this little bunt that's coming, new all-time highs for the S&P. And here we are sitting here with this narrow range bar. It's like, geez, come on. I know you ran a little race there, but couldn't you do a peekaboo to a new all-time high and little party hats on CNBC and so on? So here we've got a narrow range bar and a slowing in momentum, and we read that by a small candle body. Okay, no big deal so far. And so our internals have given us this sell signal. We know that historically it's pretty damn accurate at calling the turn of some type of corrective price action, as it did over here. Market doesn't have to crash to have a correction. And it could be just normal corrections happen. So as we go into, we'll assume this day for this conversation. All right, what is going on here? Well, slowing momentum in an area of resistance. In MT Live, we covered this bar by bar analysis, and the discussion led to, well, it's a narrow range bar and a narrow range body at resistance after a momentum move. The probability of breaking a prior bar's low is relatively high. Common sense, right? No indicators needed, just common sense. So as we go into this week, we don't know that it'll break that bar's low, but we know the probability of breaking that bar's low is pretty good. And if it does that, well, what's going to happen? Right? That's that bar's low. It's going to pull back and hit the 20. Maybe it's going to pull back and come to minor support over here where buyers are going to show up again. How do I know that? Because it's in an uptrend. Now, it will have left a week of consolidation up above, which is going to make it a bit more difficult to get through the high. So unless this market, this little resting period, is a prelude to a momentum move higher blast off, and I don't know, of course. We've spoken about the middle of the month, end of the month, so on and so forth, bullish seasonal periods and internals, this and that. It doesn't suggest that. But breaking below this low would suggest some type of short-term correction next week, which could be very nice for us as active traders. So we'll see what happens. So with that being said, let's see where we got this topping tail over here on the 15-minute, this little breakout failure. If there's premium above here, and I'll use the word with caution, call spread above here in SPX should be a no-brainer. The further we can get above here, the more of a no-brainer it'll be. Yeah, 3,400. 3,400 should be fine. It's a whole number, right? 3,405, perfect. Yep. And so, yeah, I like that. Jake is sharing his numbers here with us, which I'll share in YouTube. So those of you in YouTube, you always asking me one of the first things, SPX levels. Well, you guys should be in the green room because we've got some excellent traders in here that's their focus, and they're really good at it. And we go through the analysis and look for those levels 3 times a week, and a lot to be learned here. So I like the fact that we got the little topping tail here. Pre-market, we'll see how far that follows through, and we'll look at the other markets and see what they're doing. All right, we look to see if there's a matchup. So the Qs approached the prior high, and they backed off yesterday. Those are the futures, and just let's go to the ETF here, and you can see the topping tail. So they're up here a bit. Where are they? 272, 273, give or take. They're trading inside that range. No big deal. So let's just drag this here. Break prior day's low. And, wide range bar. We know it's a momentum move in a smaller time frame. Well, that opens up the door to shorting opportunities in the futures market. Or some people like to trade this. It's very liquid, that ETF. I prefer the futures. So we shall see about that. So this might become an M top. Now, if it's an M top, well, you get the picture of an M top which suggests the possibility of confirmation of an M-top. Well, to get the confirmation, you got to break below here. That doesn't mean we have to wait for it to break below here to be short. So we'll see if that evolves, if we are to get some corrective action next week. Now, candlestick on the weekly chart, new all-time high. But the body is inside of last week's range, so the markets have been running in place again, right? Even the leader running in place again. And while this isn't an official, I guess what the candlestick gurus would call a hangman, because it wasn't a gap up above a prior bar, we look at it, well, momentum slowed. We look at things in a really simple way. Small candle bodies, contracting range, just means momentum is slowed. And then at that point, like, okay, is it an uptrend? Is it a downtrend? Does it break a prior bar's low? Does it break a prior bar's high? So on and so forth. And so we got our lines in the sand going into next week. YM, playing catch up, bringing up the rear, and you see more running in place. But you always have to look at things objectively, especially as a price pattern trader. Those of you that have a mess of indicators on the bottom of your chart, or an Ichikumi cloud, or some GAN lines, or any of that other hocus pocus, right? Well, you got a whole nother problem. But while we have this sell signal from the internals, which doesn't mean pinpoint accuracy of the turn, right? So far things have stalled almost pinpointly. I look at this and I say, that's a pretty big range topping tail right there. And this thing hasn't broken below the low of that topping tail in, well, it'll be 4 days if it doesn't do it today. And that's to be respected. It's correcting sideways after a momentum run up. Well, we'll see where it ends the day, but if it breaks below here, well, we're going to have some opportunities for prices to pull back. And of course, pull back to where? Well, that minor support would make sense, that rising 20 MA. Not that the 20 MA is support, because it's not, but it's just widely followed by institutions, same as the 50 and same as the 200. And on the weekly time frame, we've just got a narrow range bar. So we know that there's been running in place. It cleared the high, or it's in the area of the high, and it's got room to go up. And that's a good thing for longs. And as we look at all these markets, we say, well, do we have agreement between them? And we kind of do, that things are just running in place. We got a little failure there on the 15-minute, as we saw in the S&Ps. But we got support right here. So unless it gets below here, you don't have any void for things to really move with some conviction. And we've got resistance up here. And, maybe we're going to have another Sleepy Joe kind of market. Russell, but different running in place. Right? It broke below the low of the topping tail, but just kind of a grinder. So, but it's on the edge of the cliff here as we look at this market. Remember, the one we looked at before had the support below it. This one doesn't. So if I want to short something, it's this. It's got room to drop. But putting it in the perspective of this bullish daily chart, I'm kind of, not skeptical. I'm just being objective that it probably doesn't have far to drop at intraday. It still could be a meaningful move to an intraday trader. Remember, I don't have to have an all-out sell signal on a daily time frame for me to short it intraday. I just want to see it a little bit extended and looking like it's going to pull back. That's enough for me as an intraday trader. All right. So, weekly time frame, little narrow body, or with a topping tail, more running in place. So, and this is kind of a bullish flag, I believe you might call it, if you look at the books. So would want to see this turn into a bottoming tail bar. In reality, what we really want to see is come down a little bit and then have another day of holding the area and having a 2-day consolidation at the support or above the support for it to then be able to push up into this weekly void above. Bonds. Look to the left. There you go. How simple could it be? You don't need trend lines, fib lines, or any of that other stuff. Simply look to the left for support and resistance. That's what works. Right? So stabilization here, and the markets. This is pulled back. Markets have gone up. The stabilizes here, starts to go up. Equities probably come down. Oil, there's a lot more running in place. Topping tail, little narrow range bodies going on for a month and more. It is what it is. Gold, it got shellacked this week, beginning to rebuild, repair the damage, and it'll take a little time. And silver, a little extended. It came down real hard, so that creates a lot of uncertainty. And so this may take a couple of weeks or so. I'm not sure how long, but just looking at that pattern, it'll take some time to rebuild the confidence of longs. And just put yourself in here, and you're doing fantastic. Wow. Should I take the money? I don't know. Maybe it can go to $50, and you gave back a quarter of your gains. Well, you know how that feels. John's asking me on YouTube if the Qs are rangebound. Well, they are for now. We'll see how things evolve after the first 5, 15, 20 minutes. Bringing up the rear. Right. Transports outperformed big time last week. They got a little extended. They traded under the low there, so looks like you're going to get some correction. Weekly chart is up into resistance, so airlines underperformed yesterday, but they look like they're still at possible turning points. The financials underperformed. They look like they could get turned around. Last week they did well, so there's a lot of this back and forth uncertainty, running in place. Call it what you want. It's not easy. Right? So we'll see how it all unfolds, and we'll update accordingly. All yours, Dan.
Are you done?
I'm done.
All right, didn't hear you. Zero DTE day, Friday. We love that. All right, all our opens are fine. Here's earnings. Oh, Greg, you posted this shill. It looks fantastic.
I thought you'd like that.
Put that in a window over here. Yeah,
scans.
That's the something something bar. Wide range igniting. You had a buy setup on the weekly. You got bullish pre-market. So yeah, that looks great. For a gap earnings trade, this AMAT looks fantastic. Gapping up right there. Looks great. Red bar ignored. So that's on a list both for directional and a put spread. I'd love a zero DTE on that. Ahmad, your drop down. Ahmad's asking about RVLV. It was a beautiful breakout, daily, weekly. In fact, I remember looking at this. But now, what are you going to do with it? Yesterday, gapped up, big old tail. So I have no idea. Another example, folks, if you don't tell me what your question is, I have no idea what you're asking me here. Let's see, YouTube asking about Arjun. Is the daily bullish? Yeah, the daily's bullish. It's a deep retracement. When you had this gap breakout and this wide range bar and a 1, 2, 3, and a second 1, 2, 3, although that was far from the 20, it should not have retraced this much. But yeah, it should, over yesterday's high, you should get a partial when I see deep retracements like this. I'm happy even with a 50% bounce, but a 50% bounce, I'm just eyeballing it. It's like $5. So sure, that looks good. Clob had earnings. I can't tell where you're gapping. MyGen earnings. Light volume, can't tell, but bullish pattern. That would be a no-brainer put spread if it holds. Codex had earnings. We were looking at this yesterday as a possible bull gap surprise, but today it's earnings now. Wow, that is a crazy retracement, greater than 100% round trip. I don't know what to do with that. Array, light volume, a beautiful 1, 2, 3 on the weekly. Target maybe 3.25. That's worth watching. Purple had earnings, gap down, coming back up. We'll have to wait. Fitch had earnings, $29, gap into all-time highs. No pattern though. DDS 3050. There's a nice gap. Kind of light volume, but that's a nice gap. Maybe 30-minute high. That looks good. GSX, yeah, I saw that gapping down today. Yeah, that's yeah, this thing's been in the news. We were talking about shorting a way out of the money, $50 put spread on that. Where am I? Ramble, 2190, no pattern, but it might set up for a day trade. Maybe day trade on target 23. Neon, I can't tell where you're gapping. Baba earnings, 256. No pattern, but it's range bound. Could be a put spread under the week's low. The reason I looked at Denny's is because I've seen a couple times now on the news where they're talking about a lot of these restaurant chains maybe going out of business, not paying their rent. Denny's, cheesecake, on and on. So I said, oh, let me look at Denny's. And it's actually holding up very well. Another little bottom fisher. We're still short a put spread on DRI. This is a restaurant chain. Beautiful. We did it on this wide range bar. Now, see, folks, you hear me saying all the time, I love aggressively trading when you nail the entry. And now I could see somebody saying, oh, Dan, hey, what about buying DRI now? Well, that's up 5 bars and momentum slow, far from the 20. I wouldn't touch it here. We're just managing our put spread, and it was perfect entry. Camda 1090 bullish gap, but I do not like the way this trades at all. That looks like every single day a biotech gapper. Purple had Johnny number 5 is asking about Purple had record earnings, dropped after market. What would you do now? Well, number one, we don't care what the number was. I could show you so many examples like Disney. Look, Disney, this gap up day, first loss in 19 years. They're whining all morning about their losses. And look at that that's the biggest gap up in years. So you just got to keep in mind that trading earnings, it's what the expectation of the market was going into the number. So if you're saying that you're long, Johnny number 5, you got a bearish gap on your hands. So I personally would be looking to get out on a bounce, and for a protective stop, 30-minute low is kind of our generic management. 2 more questions here. RMB and IQ. I know I'm getting to our to IQ. RMD, I can't tell where it's gapping. You're saying a nice 15-minute chart. I wouldn't call it nice. I'd call it stabilized. It broke the downtrend. So I don't know, but if it can take out yesterday's high, it would be okay. There's a day trade IQ. I know it's on my list here. Gapping down 19 bucks. The big gap, I mean, just eyeball it. The size from here to here, that's pretty darn big. And it's just chopping around pre-market. So, you know, I don't know whether, I don't know. I don't have a bias, although it's a bearish gap. So you just, if it interests you, you just put it in a 5-minute window and you watch it, see what it does. Yeah, Cameron Tesla's right here next to my list, up 44. Yeah, I mean, we said the last 2 days it was acting bullish. Up again, it's a bullish pre-market chart. I remember saying on this gap update, my target was 1650 to 1700. Look at that. It's right there now, 1665. That was my first target. MU, gap short. We would, William, we'd call that, and well, you can move your drop down. All panelists and attendees. Yesterday was a better entry as your gap. And today it's another gap and it's weak pre-market. So we would just call that a continuation move. Would be fine. Colette, is shield too extended to enter? No, it's the igniting bar. Colette, it's the igniting bar with a very bullish 15. So no, it's not extended. We're just gonna wait 5 minutes because look, the markets are weakening here pre-market, and we would, you know, we got to decide, is this on its own page enough for us to still want to buy it if the market's falling? But no, that's an igniting bar. Baidu 118, that's a bearish gap. So this is a call spread candidate, McGraw. Beaky, it's a IPO yesterday. Bearish gap down here on Beaky, but I like watching IPOs. Oh, this one I also had, I sent out a Telegram alert that I want a nice gap from this retest on Rocket Man. Let's watch that for a call spread. I'm sorry, put spread, my bad. I'm gonna continue TLC, big old gap that looks to me like a biotech. This looks like a biotech, but I don't like the way it trades. There's the IQ we talked about. Bearish. If it can't bounce, maybe 15-minute low. Upwork, McGraw, you sent this to me. Saying inside trading, I think. Not inside trading, inside buying. So it's a put spread idea here. Look at the shill. So shill looks great. I'm just waiting 5 minutes. AMAT looks fantastic. So those are on their own page, as we call them, with the cues coming in. All the fangs coming in a little bit. All right, so there's the AMAT. Oh, I had shill in my, I have shill on my list here of earnings. NVAX had earnings, bullish gap, but it's cracking the pre-market support. TLC we looked at. Dunking had earnings. Slightly bearish gap down. McGraw, this could be a possible condor. We'll come back to it. Campbell soup from yesterday, one of you all mentioned. It's a 1, 2, 3. I'd prefer a put spread if there's any juice down there. IDEX. Clack was another good. Clack looks great. That was on our list from yesterday. Look, that looks fantastic. Maybe it's the strength here along with AMAT. I see some of our junk airlines perking here on the 15. Look at UAL, Boeing, Jets, Love. So we entered some put spreads yesterday. JetBlue, NCLH is a nice airline. For a Condor, McGraw. Well, we got to wait and see. If it like stalls here, then yeah. If it negates, and takes out yesterday's high, then no. So condors, I'm pretty careful on if I'm entering them as an opening trade. Look at this, AMAT and Clack look great. I'm just not doing it with the market weak here. But those two, and Shill is on its own page. It looks good. It looks really good.